All right, a quick discussion, guys, on moving averages, right? So when I'm going to look into moving average confluence only, I'm going to go back all the way to monthly. This is 3 months, right? Have a look what's happening. And we are pretty bullish, but we are sitting in this area for a long time. All we see is making lower lows until here. Now we're waiting for this body to show us how does this want to close. I think this is going to close the end of the month, right? And then we will see that how the body is showing us. Is it going to show us reversal, some sort of? But Vic has shown beautiful rejection. I never came to 3 months usually with you, but I know that they're making beautiful lower lows and then respecting it. Now, when I'm looking at the moving averages I have on my chart are, first of all, 200 EMA, 200 SMA, and then 50 simple moving average, 8 SMA, and 8 smooth, right? Which is equal to 14 EMA, right? These are the moving averages that I usually use and put them on. How I figured them out is with the confluence and the back testing, and I took some from the Najim initially. So when I learned from him, he taught me, and then I added a few more for my own self because I think they're very popular and price reacts to them. And how can you develop the fact and understanding that does price react to them or price does not react to them? Only by back testing and by observing from all time frames, especially from weekly, daily, 4-hourly, 1-hourly, 30-minute, 15-minute, 5-minute, even 1 minute, right? And I use this confluence quite a lot in my strategy when I am trying to develop decision to whether I want to buy, which zone I'm going to look into. So I take help from moving averages a lot. So these are my moving averages that I usually put them, and you can just put them on. And what are the difference between moving averages now? Exponential moving average is it takes the most recent candles study and then try to be more responsive to the recent candles. And smooth moving average takes a good amount of candle data in record and moves slower than EMA. And smooth moving average is a form of exponential moving average, but this is based on longer data, more data as compared to EMA, right? So this is the difference. You can Google them and you will find their definitions very easily available, right? And then we see that price is sitting on 8 moving average right now, right? Price is sitting on 8 moving average. It is 8 EMA, I think. And then we are going to monthly. What's happening on monthly? Monthlies are almost like candles printing sideways. So we call it barcode. And that's why it is ranging. Then we see all the moving averages are ranging as well. You see? So you check it out. But we have an important level here, which is 1540, right? Is it going to be touched? Is it not going to be touched? There is an order block here as well. And then this one retested this order block already. Price moved up. This was all that, I think, Corona time when there was loads going on. And since then till now, we have been retracing, but not a lot, right? So you see fib level along with moving averages, along with support and resistances, and then you make a decision. Now coming down to weekly, have a look at weekly. So how I see moving averages on weekly. So I again have this trend line here, right? Showing me monthly, 3 months support and resistances. I think that is the reason, because 3 months is a good support and resistance, even if it's a trend line resistance, that it has respected this area and sharp drop down from that area on a weekly, right? And but it is not closing below this weekly, right? So we still have a chance to be bullish, because on weekly, it should be closing below this to say that it is making a lower low. And what is that area? 1784. It came here, it tapped down, and we have only one more day, that is tomorrow. If it is not closing below and the next one wants to go back, retest any of this higher area and wants to come back close below. Until we get a close below, we can be bullish and go back really high or a little bit higher and then come back down to close below, right? The move could be still more, maybe not one candle. It can take two candles down to come any of these levels. Still my favorite is this area, 70, 60, 50, something here. Right now, coming down to, so on this weekly, because we are ranging, all the way ranging just within here, and we're right in the middle of the range. We are right in the middle of the range. That is why all the moving averages are muddled up here at 1800. And isn't that such a good psychological number as well? Look at that. Are we not all muddled up here? So our 50 moving average and our 8 SMA and SSMA, smooth and simple moving average and 50 simple moving average are all sitting in the middle, right? And that level is 1800. Now, where is our 200 moving average? It is 1820. And this is EMA, and this is 1557, which is almost the same level, 50 and 40 level. It is almost the same level, the one we saw on monthly, where our moving average is sitting. So weekly and monthly, this area is important, right? Now, going down after looking at these areas, this is specific areas to show me what's going on a higher time frame. And then I can say very safely that I can draw this and price is contracting. Price is contracting. So I am using trend line. At the same time, I'm watching all the moving averages, and there is nothing so far too much into confluence that I draw a big zone, because all these three are muddled up in the middle. So let's go back to daily and see how they're reacting right now. What I see with the clear picture, that we are sitting in the center of this range, and we are absolutely contracting. We're going to break on one side, either to the bottom or to the top, and then continue the move, right? So we are going to go to daily now. All right, here we are sitting on the daily with you. And so we looked at monthly, 3 monthly, weekly, daily. I want to see here is what is it doing on daily? Again, we're ranging, and oh, look at this. We have it here on a smaller time frame, but this is an important level, 1818 could be tapped. But keep in mind, if we are going to take too long to go up and retest any of this area, by then, maybe they can just join together and sit here somewhere a little bit lower, because moving averages come towards the price and price moves towards the moving average. They both attract each other. So by the time on a higher time frame that we come up or down, price has usually moved a little bit more. So maybe by the time we come back and retest this area on the left-hand side, which is important, right here, we come back and retest it again, our moving averages could be coming down as well, and we might meet up somewhere here, right in the middle. And I want to see that, are we going to have further confluence in this area? Maybe let's go and watch it. So keep in mind that this is your moving average, and this is another moving average. Now we have 250 and EMA 200 sitting in these areas. What are those areas on daily? Again, 1800, 1799, 1800 area exactly. And then we have 1790, 92 area. And the other important area is 88, right? Let's go back down. And here you are. All right, now we are looking at price on 4 hour. For our daily target, 4 hour to me matters a lot. For our daily usual trades that we look into, 4 hour matters a lot. So it is kind of an OB. I'm going to adjust this a little bit, and I'm going to make sure that I fit it in a way that it gives me a good confluence with my zone. that I'm looking on a smaller time frame. So always remember, while coming up, it has one moving average on the way. So maybe we come here, tap down, and react to this price. If we have to go up, right? React to this price, reject a little bit. If it doesn't want to go back much, then we're going to come back up. And then we have this confluence in this area, important one. And then we have this confluence in this area, right? Keep these in your mind while taking a position and while looking for a reaction. And also maybe the first one could be here reaction, and the second one you can see here, and both time you can add some more pips. So this is how I look at the moving averages all the time. I keep them, and then I can take a middle of these two as well, somewhere in the middle, and then have 50% of my box that I have on already here, and then trade it together, right? Now, looking at the bottom, this 50 moving average is creating some sort of support for me, this one here. And I want to see which one is that. And if it is going to be respected, then well and good. If it is not going to be respected, then I'm going to watch what other moving averages do we have on the way. So which one was this? This is 8 moving average. This is 8 moving average right here on the way, holding the price. And this is on 4 hour, right? So this has so far, because the body is closing above, I will say that this is holding the price right now. Body did not close below the moving average. Then I'm going to watch what is below that. Is there any significant price? No, nothing is below that. No moving average below that. All the moving averages are above, except the 50 moving average, 8 moving average. So if we are going to cross this and start closing below this moving average, then nothing is going to hold us. We are going to definitely keep dropping down, and then we are going to see on a smaller time frame what is going to hold us. Maybe one of those can hold the price down, right? And what we are going to do with that is just keep this area in mind, and then with this area I'm going to draw a little bit higher to include this 200 moving average in my price action, because I will consider the wick on these wicks on the left, but include this moving average as well. By the time price comes up here, maybe this moving average will come down a little bit further down, because moving averages are based on the number of candles. If we make more candles and do not move much, like we're not moving right now, there is a possibility that it is going to be in my box, right? And we can reassess it and come back, tap into this area, 96, 97, and then reject that and continue moving down. This way, we are going to take the sellers from here out and sellers from this position out, right? And that, when is that going to happen? At that time, come back, look at the 4 hour moving average, and keep in your mind, adjust your zone, and have your confluence ready. That where is the supportive moving average and which one is the resistance moving average that you are going to look at. Okay, now going back to 1 hour. All righty. On 1 hour, ranges, obviously, nothing up and down too much, but on the way down, if I have taken a buy based on this candle rejection, if I have taken a buy from this area that I had earlier on, it was 30 moving average, 50 moving average on 30-minute time frame. The price is beautifully sitting right on the pin spot. Remember, we just looked at it, and then we took a trade, and then we let it run, and we were waiting. It was on 4 hour, 8 moving average, but I also had in mind 30-minute, 50 moving average that, and I told everybody live on the Zoom that maybe if we cross below this, then we have a chance that this can be acting as a support, because it is sitting in the area which is of interest to me based on the history here. This area that has been acting as a support, right? Which could be acting as a resistance right now. So I had this in my mind, and then I looked at the moving average, and then I had 4 hour area in my mind when price was dropping, and then 30-minute, it wicked down, rejected, and since then till now, we are just pushing up each time, right? Price never came back to this area again. And then I'm going to be looking at, sorry, what other moving averages were on 1 hour? Now, what you have to do is you have to look on the important moving averages, for example, this one and this one here. Then you have 50 moving average on here. If it's going to come back, retest this 50 moving average, and is it going to be held by this, then it's all good. If it starts closing below this, then you know that we can retest upward and continue moving down. So be careful on what time frame you see the moving averages and what is above the price, current price, and what is below the current price, and start securing accordingly. Oh my God, guys, I'm good pips up. My 0.01 position that we took in a joke is 25 pips up. Thank you. Don't mind my excitement. So we are looking at 15-minute now. So while taking an entry, I also keep 15-minute and 5-minute everything in my mind, and especially when we are taking an entry, like for example, we did it here, right? We took an entry, it was held by 2 8 moving averages all the way until the trend is over. And then we moving averages cross, and then we get when they cross, we get a good push down, right? So we see, all we see here is that when the trend reversals is there, we are already in the trend, right? We see the candles anyway. We see, go back, look at the higher time frames and our zones to take an entry. But if they start coming below, retest and start closing below the moving averages, that is the confirmation for the sells. So either you take a trade here based on a smaller time frame, or you let it come back, retest this area held by the moving averages, and then start going down. However you prefer, how safe you want to be. Are you a break and retest type of a trader, or are you a reversal pattern trader? For me personally, I looked at this, I took a trade, stop loss above this consolidation, 10 pip above. I took this trade. When it came back up, I saw that it is a break of structure retest. I took another trade on 1 minute, based on 1 minute, and then I let it go. So I was good pips down, almost 50 for this one, the first one, and then 38, 40 for the other one, right? So this is how I sometimes look at it, and this is another safe entry. Break, retest, and then you can take an entry and let it go. Okay, and also 1 minute tells me a lot about the entries and about the trend reversals, a lot, most of the time. So here, for example, I'm looking at it each time, high highs, high lows, high highs, high lows, high lows. When this one taps down, start closing below the first one, then I'm clocking onto it. I'm already talking to the candles and I'm clocking onto it. Second one, and the third one. This is a beautiful confirmation for it to continue going down. Very beautiful confirmation, because now the prices are held by the moving averages, starting closing below that. And then you can look, if it's a volume time, that is even better. Then you can look for a reversal. This is how I study that. And on the way back, then you see that there's 200 EMA. Is it going to hold it? Is it not going to hold it? And then you'll say 200, a simple moving average, and then 50 moving, it's closing beyond all of them. And then retesting all these muddled up EMAs and simple, smooth EMA, all of them, and then going down. Consolidation, held by them, nothing closing above them, continuation, right? So this is how I look at the moving averages, and this is how I trade with them. Always there is death cross and this and that. I don't look at it too much when the 200 moving average is crossed by 50 moving average, because they're not that special to me, because I'm already in with the candles of reversal candles. So I do not do break and retest. So I'm already in the candles, so they're not that significant to me, but you can definitely read more about them and trade them. And if you have any question right now about the moving averages, you can simply ask me. I have to show you one more thing here. When the price was dropping, it was dropping beautifully and then dropped again. And when there was a reversal coming up, I could see on 1 minute time frame that that we are starting to close above. So I'm going to show you that so that you can make up your mind and learn to trade that. All right. Now, when in the volume time, price is dropping. Look what happens. Price is dropping. Beautiful 1 minute drop, right? That's how they want to do it. Beautiful 1 minute drop, retest to one of these moving averages, not closing above them. What are they going to do? Drop further down, push down, again, push down. Now, when they start closing above this moving average, these two candles, and I already know that there is a zone on the left, and they're starting to close above, and we've seen this happening, then be very careful. This helps me securing. This helps me securing all the cells, especially if I'm in with big partials. So I keep that in my mind. When they come down and I see them starting to close above, and before even this push up, I am very, very quick to secure. And even if it pushes up, I want to see, let it go back, retest one of these moving averages. You will secure still 10, 20 pips down. And then when it comes back down, rejecting, you're sure further, secure more. Because then you don't know, is it going to correct the whole thing up? There are chances, there are times that it has done that. Just correct everything and then go back out. So I'm not sure about what's going to happen. So best is to secure some more, take it off the table, and then let it do its thing. Okay. And then if it starts closing below this again, then you see that now price is held back below the moving average. So these moving averages telling you either they're supporting or they're resisting. They're resisting or supporting and taking the price up. Each way, it is so easy to figure that out. What's happening on a smaller time frame. You don't have to draw your trend line. These act like your trend line. All right, so keep an eye on all different time frames, and the same happens on 5 minutes. The same you will see on 15 minutes, but they take a little longer. And for me, I want to know a bit quicker, a bit in advance, and that's all what I do. That's all. This is how I see moving averages, and this is how I trade with them. So right now, with the current situation that we have on, we beautifully came up all the way from here. This is my entry, and we're 25 pip up. And because today was the bank holiday, we were just messing around up and down, too much volatility, and then we let it be. We're not taking actual trades here. We're just messing around, and that's why we got into studies. So right now, current position, current analysis, price been held by, on 5 minutes, it's been held by our 8 moving averages. It has crossed above. We still have 1 minute 48 seconds. Let's see. Is it going to close above this moving average, 200 moving average and 200 EMA, above 50 moving average? And how high does it want to go? Because it has to come back close to 8 moving average. That is very close to this moving average. So there is always, when there is a quick push up, it has to retrace, and then moving average has to come up, and then somewhere in the middle they meet, right? They meet up together. And look at that. Look at that. Now, on the way back, when I'm looking for a reversal, for example, if this is the zone and I'm looking for a reversal, and this is an important key level, and then I'm looking for an entry for a sell, in case I am, right? Then I'm going to wait for the confluence to show me some reversal patterns like these. And then I am going to enter the trade, but I'm going to be very carefully watching it. Is the next candle closing below these moving averages that are going to be on the way back? This one, and then this one. Keep watching them. They will bounce back from one of those and then retest the highs. And then again, you have to watch it. Is it going to continue or is it going to come above? You have to continuously watch it on smaller time frames and then take your trade. And if you have any question, you can ask me now. 1933 for Yash. I'll stop recording.